Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some macro charts. Got to talk about crypto first. That's really the only thing that matters when crypto is moving. Bitcoin overnight hit 123. We have pierced the yearly pivot. Unsurprisingly, we are taking a little bit of a pit stop here. Thus far, that's a pretty ugly daily candle. Not something you want to see. I'm guessing we are going to need a few days to consolidate before we go higher. I don't think the rally's at risk. I think this continues to go way higher for the rest of the month. We have CPI tomorrow that's going to probably bring some downward volatility. So ideally, we have people loading the boat on the shorts. As you can clearly see, there's somebody either taking profit up here or continuing to short, which good for them. Brings us low enough for them not to take profit. But, we margin call the longs on the way down, we margin call the shorts on the way back up, and then we continue on our merry way. That's just the circle of life, really. Stop loss here still isn't until 105. I mean, we haven't even made a daily Williams fractal in either direction. The breakout is still fresh. Anything back to 110 will probably be a very welcomed buy for anybody. So far so good on the chart pattern and the breakout. I'm still watching MSTR closely here. It looks really good, not gonna lie. It's just if you're worried about downward volatility ahead of a CPI print like we are tomorrow morning at 8:30 EST, then maybe not the best candle. Little spinning top, not bearish, but it does tend to bring reversals because you get an equilibrium of buyers and sellers finally after the bounce, in this case, from June to July. So we'll see if my caution ahead of tomorrow's print is unwarranted or not pretty quickly tomorrow morning. But if you're trying to be a market timer, maybe you're a little patient waiting for this potentially back to 420, right? We're not talking about anything crazy here. We're just trying to clear a way for a path higher. MSTU, same deal. Spinning top still looks great, still looks fine. I like it at any price. I like any chart that looks like this. It's just you're dealing with nitroglycerin, right? Maybe you use a little safety. You take it a little slow. Extremely high volatility on this one. We've got coin right there at the expanding, broadening wedge resistance. If you're bullish the rest of the year, I don't think you have a problem buying up here. If you're bullish on this pattern, you certainly don't have a problem buying up here. As we'll take a look at the legacy indices, they seem to be unbothered, moisturized in their lane. They look fine. It's just, this is up 2x from the lows plus, may require some consolidation up here on coin, and WGMI also 2x plus from lows. Looks to be consolidating ascending triangle / bull flag. Shouldn't be an issue for continuation eventually, especially if Bitcoin finds its footing once again here at 120. Miners should continue to do well. Marathon still looks great. A lot of these miners still look great individually outside of the ETF. And if I had to pick 4 charts to watch this week, it would be Doge, WIF, Sol, and AVAX. Not because I believe in the tech in any of these or I care. Let's be honest. It's great to see the tech. It's great to see people using the tech. But the TA is why we're here. Whether it be meme coins, biotech, energy, commodities, whatever. It doesn't matter to me. So keep that in mind. But when I'm looking at this, either pre-breakout or fresh breakouts on the daily cloud, as opposed to everything else that has moved already, things like MOG, Stellar, Ripple, even ETH to a little lesser extent, these have yet to move. Now, it's possible that they just continue to be stuck in the mud and go nowhere. There are charts that look significantly better than this, which maybe you don't want to rotate into here. I'd say these are neutral leaning bullish. And then there's some charts that look worse than this, which are still bearish, trying to recover. So if I was throwing money anywhere this week, it would be in charts that look like this. Nothing too crazy. They don't look particularly welcoming, inviting. You could argue Sol, low time frame inverted head and shoulders. WIF, same deal. WIF is just Sol beta. You could add Link to this list as well. Link looks good. Hasn't quite broken out yet. So there's something to do outside of majors and things that have already moved. If you're looking for rotations, I think there's plenty of options there. ETF flows, ETP flows globally last week from James at CoinShares, 3.7 billion in. That is a huge number for any industry, let alone digital assets. And we can see majority of that coming in through BTC, coming in through BlackRock, majority of that also coming from Ethereum, almost $1 billion for Ethereum. It's a record flow week for them. Majority of that coming from BlackRock as well. And globally, it's not even close. USA number one, absolutely. I thought it'd be interesting to look at the gold versus Bitcoin ETF flows today. Unsurprisingly, they are almost perfectly inverse, especially recently. Gold in the gold there, white is Bitcoin. And just as gold was topping, BTC flows were bottoming, and now we're seeing an inverse. So maybe something just on the back burner to keep an eye on. Like we've said before, if gold starts to take off price-wise, you're likely to see flows. And that also likely means that Bitcoin, crypto, digital assets do nothing for a little while and wait their turn. It's clearly our turn right now. So if you're bullish BTC, you actually don't want to see gold break out here. Don't have a chart on gold today. It's just sort of consolidating. Not really much going on that front. As far as the basis trade, 8%, still fairly flat. Nothing too crazy. ETH slightly higher. ETH CME futures OI, I think that's a new all-time high. So we're certainly seeing activity outside of BTC pick up in more ways than one. We're starting to see broadening slightly into alts. And you've got some TA to back that up as well, obviously. For the calendar this week, the only thing that really matters to me is CPI, a bunch of Fed speak, PPI, fine, US retail sales, whatever. Housing starts, sure. But this whole week is going to hinge around the CPI print tomorrow, because if it is way above expectations, then we remove Fed cuts for the rest of the year almost entirely. That angers Trump. Does he then move to get rid of Powell sooner rather than later on whatever grounds he can? Possible. Just something to think about. Now, if CPI comes in not as hot and it's just lukewarm, fine. I think the markets are okay with that. But currently, there's only 4 more meetings for the rest of the year. No meeting in August. That's Jackson Hole. That's when we could potentially see forward guidance for the rest of the year for Q4. No meeting in October either. But there's not a lot of time for 2 cuts. So we're kind of putting this down to the wire here. And it's very unlikely we see anything this month. So we're talking about September and December, potentially. And if CPI comes in hot, I would have to guess these would shift even further out. Odds would shift right here in the next 4 months. And I don't know if the market is prepared for that. I hope the market, air quotes, is aware that we're going to get a hot CPI print. Real-time data on true-inflation has been very volatile, very noisy on a day-to-day basis. It has come back down. And this is what we're seeing in CPI. If we look at the FedNow projections, we're starting to see CPI come back up. But based on this, you would expect CPI to curl down later on in the year. The problem is if the Fed is moving from meeting to meeting and they're not looking at the forward data, then they're going to say, okay, inflation's rising, no cuts. Sorry, unemployment's at historic lows. Why would we cut? That's what they're going to say. That's what Powell's going to say. So definitely something to keep in mind for tomorrow. Here's the expected number for tomorrow, 2.64. That's inflation print for last month. We are now 14 days into this month. This will be the print for next month, and it is still higher yet. So this had been coming down, and now it's coming back up again on almost every front here. Core PCE, not in the direction we want to see it. So if these materialize as is, I mean, this is a decent jump from 2.4, but if these materialize as is, I can't imagine Powell would cut. I just can't. He hasn't wanted to cut based on tariffs previously, and tariffs are back in the headlines again. We're still renegotiating deals or sending people letters. Whatever we're doing isn't helping the situation. And at the same time, Trump is angry at Powell for not cutting because Powell is saying he's worried about tariff-related inflation. So it is what it is, but the numbers are the numbers. If these continue to rise, then we're not going to see cuts until Powell is gone, whenever that is, either before his term ends or when his term ends early next year. We've also got a lot of housing-related headlines from the National Director of Housing, Pulte. He's, of course, wrangling for rates to go to zero, as anybody in real estate would be, largely because a lot of this stuff is unaffordable. And the thinking being, well, if we bring rates down, then more people can buy a house because it's going to make more sense to have a mortgage. Possible, but I'd assume housing prices would increase. That's my assumption. And if we look at why no one's buying a house now, this is the differential here. Median income versus median home price is out of control relative to 1985. So that, of course, is working its way into every single housing metric. This is mortgage rates by state. I don't know what's going on in Iowa or Maine, but a lot of these states extremely hot on this map, even Alaska, for whatever that means. But not some place you want to be as a first-time home buyer versus sub 5% or even sub 3%, where a lot of mortgages currently sit. And this, of course, adds to housing costs. It makes mortgage payments unaffordable relative to renting. And what do people expect, right? I mean, this is what you'd expect based on what you're seeing in the data. If housing is unaffordable, people are going to do something else. Show me the incentives or disincentives, and I'll show you the outcome. And that's what we're seeing here. So we're seeing pending home sales continue to decline. And this isn't a surprise, especially if in the news you're being told, oh, rates are going to come down, rates are going to come down. Are you going to buy a house now and lock in a 30-year mortgage? Or are you going to wait maybe 6 months when rates are down for whatever reason, good or bad, and then sign that mortgage? Makes sense to me. Also interesting that this seasonal effect we kind of peak in May and then just dwindle the rest of the year. So we could see some ridiculous year-over-year numbers, assuming we get like a mega cut early 2026. We could see this year-over-year number just jump off the page, right? But a lot of this housing data is just related to affordability. GDP real quick, still fine. No issues there, 2.6. You're not going to get a recession at a 2.6 GDP. You're not going to get a recession unless you have back-to-back negative GDP prints. So that's not what we're seeing. No recession. There's still issues when we're talking about spending and debt and the debt ceiling and how do we issue this debt as a government. Again, like many people probably waiting for rates to come down on the mortgage side of things, you've got the Treasury Secretary, Scott Bessent, also waiting for rates to come down in the hopes that we can term out the debt on the long end with a much lower rate. In the meantime, they're issuing a ton of debt at the front end. This chart kind of is meaningless because you need to see what happened in 21, 2020, right? What happened in prior years. But the point is, yes, we have a ton of issuance on the front end. And when we look at the yield curve, still positive, still a possibility of a recession, something to keep in mind. But again, if we don't have back-to-back negative GDP prints, we can have these pockets of recessionary activity, but we will not have a declared recession. It just won't happen. Unemployment down there at 4.1%. You're also not seeing a broad uptick in the print. So you can say the data is wrong or fake, but this is the data we have. Just like when Biden was in, same deal. We are not seeing runaway unemployment yet. Very hard to have a recession unless you have that. Very hard to have a recession unless markets are down as well. So be careful who you're listening out there and never go full macro. For the bond ETFs, the question here is ultimately, even just on technicals, would you buy any of this? What looks compelling here? Think about this versus crypto right now. Yes, crypto's volatile, sure, but none of this looks compelling to me. Now, let's say some of this stuff starts to break out. Maybe IEF can make a higher high. I like that. Maybe AG can start to make a higher high. I like that. But TLT continues to make lower lows and is almost ready for a new multi-year low. Not someplace I'd want to sit as a young person. Not someplace I'd want to sit as an older person either. So I don't know who the TLT is for, and that just means yields potentially continue to go higher because this is the ETF for the long end. Eventually there will be a price and a yield that people will want to buy, but we haven't found that price yet. And when you're looking at charts like this, the 10-year rolling nominal return of the 10-year US government bond, does this look like a chart you want to buy? I don't. You could say, well, it was at X% and now it's 0. So maybe this is the bottom. Not for me. Sorry, dog. That's a no from me. So let it rot. Okay. It's just not any place most people with a brain would want to be. In the near term, we do have DXY curling up. This is US dollar. On the back of tomorrow, again, watch what is the print? How hot is it? What happens to DXY? What is the market reaction? Because we can postulate all this stuff we want. We can speculate and say, oh, well, there's blah, 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 right? Whatever. What happens to the rate expectations? What happens to DXY? What happens to legacy? How does crypto react? That's all that matters to me. So if this continues to break up, legacy should break down, and crypto is going to have a harder time holding on to those highs. So you're certainly rooting for a muted reaction tomorrow in the DXY. This is the SPY, and honestly, it looks fine. Like day over day, it's just consolidating all-time highs. You could say that's a little ascending triangle up there. That's a bull flag up there. It looks plenty fine, and it has room to run based on the technicals. Still in a bull trend, still above the cloud. It had a really hot start out of the gate, and that's why it's as far as it is relative to the TK lines here versus any time, in 23 or 24, where it was a kind of a smoother ascent. But so far, so good. Now, if this reaches for 600, then we're talking potentially issues. But even then, 584 would be a massive buy. Risk reward to me here isn't quite where you want to be. That's why you always want to catch this stuff on the breakout. That's why I'm highlighting these charts at the breakout. That's the day. Like, today's the day. If not now, then when for Solana, right? Same thing. It's been above the cloud for a few days. You'd expect this to go higher. Good things happen above the cloud. Same thing with WIF. Anyway, so this still looks fine. No issues there. Qs, same deal. A little bit stretched, sure. Still looks okay at all-time highs. Still plenty of room on the measured move of the bullish reversal. No big issues there. Nothing screaming at me. Now, if this looked more bearish, I'd say, okay, positioning crypto, maybe pull some back on the leverage, maybe be careful. But as long as legacy just looks okay, we'll be fine. IWM has also pulled up quite a bit. Probably going to get a new Williams fractal at the current low for today, which is around 221. Important for me is I'm trading IWM and TNA, but still more room to run in IWM than the SPY or the Qs. If rate expectations get pushed out, IWM specifically could get very angry because these are very rate sensitive companies in here, zombie companies who need to refinance, regional banks, that sort of thing. So this is probably another one to watch, add to the list tomorrow. How does the IWM look on open relative to the CPI print? SMH looks fine, but again, what is the trade here? Buy, sell, or hold? It's a hold leaning to sell just because it's reached its expected TA potential. Now, if you're a long-term semis bull, what do you care, right? But if you're just trading this based on technicals, this is the wheelhouse, 281 to 320, where you'd expect this to go based on the pattern. And it certainly got there in quite a hurry. AMD is another one in the semis list that, just for the sake of Williams fractal discussion, pulled me out at around 135, which, hey, that's the system. Sometimes this is what happens, where the trailing stop loss, what it's trying to do is pull you out to prevent any further drawdown to 118, let's say. But that was the literal bottom on that day. So what would you do here if you wanted AMD again, which doesn't really make sense again because of the risk reward profile relative to where we are, but whatever. You'd want to be adding that back on any higher high fractal above 147, it looks like. This is just important to think about this sort of thing if you're new to trading the fractals for trailing stop losses or trailing limit entries. When we're thinking about Bitcoin, we don't have any fractals at all here to even show you. So, there's nothing to really talk about, but we will have a fractal very likely at that 123 level. And that would be the fractal saying, okay, if we break that level again, that's a good place to add. On a relative basis, Intel may be a better play here than AMD or SMH or SOXL or whatever people are trading on the leverage side. This is yet to break out. Certainly bottomy looking, little triple bottom, nice little range it's been in for basically a year now. Not that I'm a big Intel bull, but look, you get higher highs, you get a cloud flip, and you get a nice little trade on your hands in a relative time when, just like if we're looking at all these alts, some of this stuff has already run up. Does it make sense to buy something that's up 60% in a couple days? I don't think so, but that's just me. Just another example of a relative value trade to think about. LabVIEW and Biotech as a whole is another one. This is leveraged Biotech, but something else I've been looking at more and more and more. If small caps and zombie companies and highly speculative stuff like Biotech starts to take off, this is a way to express that idea. The last time I tried to trade this, it broke out and then gave it all back. Got stopped out. That's okay. But here again, we have ascending triangle, triple bottom type material with the cloud on your side on the daily. Something to think about in the mix if speculative fervor animal spirits remain. Here's Mark, another one. Same deal. Little triple bottom there. Trying to make its way through the cloud. And the goal here is always to try to find opportunities before they move, right? Which is why we're talking about Doge, WIF, Sol, AVAX. It's the same concept. We're Where's the greatest risk reward potential? Downside here is 75. Upside is whatever the 50% range is from here. Maybe it's 107 or something, right? I don't know. It's a decent trade and could provide a bullish continuation move, right? Maybe this is a Q4 idea to think about. Put this one back in the oven. Intel probably looks a little better than this. Even EVAV is another one. Leveraged EVs. This is, of course, Tesla, Rivian, a few other international companies, Lucid, whatever. Hasn't gone anywhere for a long time. Now, we caught a trade on this in Q4 24, but it still hasn't really gone anywhere. One word of caution on charting leveraged ETFs is you, of course, have volatility drag, so everything's going to just continuously go down most of the time. When nothing's going on, you're going to get volatility drag. When price is going against you, you're going to get volatility drag. So you got to be careful with that and making any broad brushstrokes here. But if this stuff can start to do well, maybe another thing to consider, above 25, and maybe you get a decent run. The last cloud breakout was squashed, right? You got nothing. Maybe time to think about revisiting that later on. Not right now, but down the line. For a right now idea, I really like XLU. I'm sure there's a leveraged utilities ETF out there, but this is just sitting at all-time highs. Again, you've got cup and handle stuff going on here. You've got inverted head and shoulders stuff. You've got cloud stuff. You got a measured move, certainly higher. It's unexciting, boring, but in a time when everything else, again, on a relative value basis, may look barely overbought and just the risk reward profile isn't there, this is something to consider, to rotate into. And of course, this has the AI backdrop, the energy, nuclear backdrop, data center backdrop, that sort of thing. Certainly could help fuel that higher. And then on the commodity side, there's plenty of charts. This one highlighted by someone on a stream last week and the week before. Great looking inverted head and shoulders there, cloud breakout on the daily. Love it. I love anything that looks like this, right? Whether it be Merck or EVAV or Doge. On the technicals don't care, right? But in the moment, we know, because we're living on Earth, okay, yes, they're printing, debt is huge, Bitcoin's going up, anything you can't print is going up. It makes sense that commodities, rare earths, REMX is the rare earth index. This looks phenomenal as well. This is a multi-year breakup on the cloud. It's like ETH BTC, right? I mean, it's been going down since 2022. So this looks phenomenal. And probably a bit late on the platinum palladium idea, but even that also looks phenomenal. So there's many options here that isn't just, hey, let's stuff money into the SPY, you know? If you're looking to trade a little bit, maybe on a higher time frame, not day trade necessarily, but I think there are some things to do here. That's all for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.